Hello there and welcome to another video. So today's video is just going to be very quick. We just want to talk about how to use premium and discount zones. You may have been hearing of it before, premium and discount zones, and you are wondering what you can use them for. They are just there for you to understand where you should be selling or where you should be buying, and where you should not be selling, where you should not be buying. It is actually very simple. Before you even think of going into the chart to buy or sell, just ask yourself, in the real world, I believe you want to be buying any commodity that you want to buy. You want to be buying it at a discount level, at the best price possible. You want to buy it at a cheap price. All right. If also you are a seller of anything, if you sell your skill, if you sell a product, you sell whatever thing that you sell real estate, you sell whatever you sell, you want to sell to somebody, or you want to sell to a group of people, or you want to sell at the best price possible, the highest price possible is where you want to be selling, right? If for instance, you have a skill, you want to be offering that skill to a group of people or a country where you know that the value for your work is going to be appreciated and you get the most value out of that skill that you are putting in. Okay, same thing also if you are actually trying to buy a product, you are trying to buy a service, you want to go and find it where it is at its cheapest. You want to find the same thing, the same quality of for instance a commodity, but you want to actually buy it at a very cheap rate, at a very inexpensive rate. That's how you get the best value for your money, right? Just apply that same thing on the chart. You want to be selling at a point where you're going to make the most profit. Okay, again, you want to be buying at a point where it is cheapest so that you can sell at a place where you also make the most profits. That is just simply what the whole idea of premium and discount. So that's what it is all about. Okay, first things first, you have to actually we use the Fibonacci retracement tool for it to actually spot the premium and the discount zone. So first things first, you must make up your mind. You must set your charts. You must set your Fibonacci retracement tool for it to be clear enough for you to understand. Then secondly, you have to be able to spot your swing highs and your swing lows. I made a video on swing highs and swing lows. If you do not know how to spot it yet, you can as well go over, watch that video, and then come back to this one and complete it, because both videos work hand in hand. If this topic interests you, stay to the end of this video and I'm sure that it is going to be worth your time. After the disclaimer, we'll get started. So it is actually very simple. I'm just going to be pulling up my Fibonacci retracement tool. So mine is already set. So yours may not be exactly this way, but whatever it is, just look for your Fibonacci retracement tool right here on this place where all the icons are listed. Just look for Fibonacci retracement tool, and when it is showing here, whatever way it is showing, it may not necessarily. I set mine to what you are seeing right here. So in case you haven't, or in case you're still finding it difficult, what you basically need, you don't need all of these boxes would be ticked in yours. All of these boxes will be ticked in yours right here. Here, all of these boxes will be ticked. Okay, I personally took out all the unnecessary ones and I'm just going to be using what I want. Okay, so the numbers or the parameters I want to use, or I always use, is the 1, 0, 1, 0.7, 0.786, 0.618, 0.5, and then 1. Okay, let's set that, and then I will tell you the implication or what all of these numbers represent on your chart. Okay, so whatever it is looking like, you can set the colors, you can make changes how you deem fit, but most importantly, just make sure that your 0 is on, your 0.618 is on, your 1 is on, your 0.5 is on, your 0.786 is on, right? Every other one, you can see it, I turned off every other one, because these are the ones that I'm going to be paying attention to. These are the ones I always use. Okay, so now that you have found this, we have about 5 of them here. So they are the parameters we would always need. So first things first, you open your chart. Okay, let's use this one. You open your chart right here. It seems to me like price is in a range, but then let's just use this. This market is actually selling, right? So in a sell trend, of course, you and I know that in a sell trend, I want to be looking for selling opportunities. I don't want to be counter trending. Okay, that is there. Of course, there are some traders who try to counter trend. You can do that, but to be on the safe side, I only want to be selling, and I only want to be selling. Remember the theory we had at the beginning. I only want to be selling at a point where I will get the most value. All right, so I want to be selling at a premium zone. I want to be buying at a discount zone. So right here, I want to use the Fibonacci retracement tool to look for a better place to sell, to look for a premium place to sell. Okay, now in this case, how do I look for these premium zones? Looking at the chart, I've seen that okay, price is actually selling. Okay, I want to ask myself on this time frame, what is the highest point that where is the last break of structure according to this sell movement? Okay, this is the last break of structure in this sell movement. So that's my 1 hour high. So in this case, if I want to actually trade, if this is actually, I want to go into the chart and trade, I'm not going to be starting from the 1 hour time frame, right? I would want to be starting from the higher time frame, maybe a daily time frame, then move over to the 4 hour time frame, from there 1 hour time frame, of course, just to get a better picture of what the market is doing on a higher time frame, right? But for the sake of this example, let's just roll with what we have here. So I've identified my 1 hour high, I've identified my 1 hour low, which is the lowest point that price actually went to before it pivoted and tried to retrace. Okay, so imagine that we did not have all of this. Okay, imagine that we do not have all of this. This is the last point that price got to. This is the last point that price got to before it started looking for a way to pull back or find a temporary retracement so that it can continue selling. So this is what I have, the 1 hour high and 1 hour low. Okay, and I want to actually trade this market. Okay, so I know that yes, on the higher time frame or generally the price is selling. I shouldn't be selling anywhere. If I sell at this point, I'm most likely going to be stopped out because price is trying to retrace. Price needs a healthy retracement. If it is in a sell, it needs a healthy buy so that I can continue the sell movement. If price is in a buy, it needs a temporary healthy sell, and then it's going to continue selling. Okay, so in this case, price is selling. I hope I did not mix that up, but I hope you get the point. So price is selling. Okay, it's sold up to this point. It is trying to retrace. So I am definitely going to be seeing a little buy movement here. Of course, not impulsive because the overall trend is not a buy trend, it's a sell trend. So I know I'm going to be seeing a little buy movement, and then price is going to look for any zone from here and actually sell. How do I know where it is now safe to continue with the sell movement? Assuming I do not want to buy, I do not want to participate in this little buy movement. I just want to focus on the bigger picture, which is the sell movement. Okay, so I don't want to engage myself in any form of buying. I want to sell. So there are places where it wouldn't be wise for me to. I don't want to be selling at a discount zone. I want to be selling at a premium zone. Okay, so that is where I now pick up my Fibonacci retracement tool, pick it up from the swing high that I have identified down to the swing low. Okay, down to the swing low. You see why marking out my range, which is the 1 hour high and my 1 hour low, you see why those things are actually important. So it is very, very easy for me to just pick up my Fibonacci retracement tool, point it at the high of the range and the low of the range, and then that's just it. So right here, I want price to come and sit comfortably somewhere within the 1 to 0.5. Anywhere within 0.5. Hold on, anywhere within 0.5 and 0. I don't want to engage in any form of selling. Okay, I do not want to engage in it. If I want to counter trend, this is where I would be thinking of getting into a temporary buy. But of course, like I said, I personally wouldn't want to go into this small buy movement. But of course, every trader has their own way of interacting with the market. So yes, I know that there are some traders who would want to participate in this temporary buy movement in the existing sell movement, in the original sell movement. So yeah, they may decide to come here and start buying. So if I do not want to do that, I just simply want to be a patient dog that eats the fattest bone. If I want to be patient, and then I just want to wait for price to get into a zone where it is most likely going to be selling from, this is what I will just do. I'll just take note of, I'll know that yes, okay, from here to here is now what do I use to, okay, let me use a triangle still. So from here to here, especially within 0.5, 0.6 and 0.786, these are my golden pockets, right? This is my golden pocket. If price comes into any of these zones that I have just stated, I want to look for a POI. Okay, it depends on what you use as your POI. If it is an order block, fair value gap, mitigation block, breaker block, whatever it is that you use as your form of entry, this is now where you look for it. So if I see an order block somewhere within this zone from 0.5, let me take this away. So if I see a zone from 0.5 to, if I see a zone from 0, if I see, for instance, let's say order block is my preferred POI, right? If it is my entry point, let's say assume my order block is my preferred entry model, or fair value gap is my preferred entry model. I would, if I find it anywhere in the discount level, I don't want to take that trade. Okay, so that is how you know. That's how you know your POIs that will fail. Yes, there are some POIs that are bound to fail. Okay, so assuming that I like to take my trades from fair value gaps, this is a fair value gap right here. If I'm not mistaken, this is a fair value gap right here. But I won't be looking for a sell here. Why? Because it is in a discount level. The overall trend is a sell movement. So I definitely want to be looking for my preferred entry model in the premium level, not in the discount level, because price is actually selling. So fair value gap is what I trade, but I definitely will not be selling here. I definitely will not be selling anywhere there, right? Because I know that yes, price is actually coming to give a temporary buy movement, come into any of the zones right here and then continue selling. That's where I want to now be looking for my preferred point of interest. But for here, I wouldn't be doing that. I would just prefer to wait for price to buy up to this point, right? And then we start changing buyers. Okay, so I believe that is understood. So let me put this back. Let's use the rectangle instead. So 0.5 up to 1, and let me just take that Fibonacci retracement tool away. So I know that yes, from this zone here to this point, I don't want to be selling. Any point of interest that price presents, I'm just going to ignore it. Okay, I'm just going to ignore it. I would wait for price to come into my premium level. So let's see what price does. Okay, so now this is what do I do? Let's take away the rectangle and use a horizontal ray. Give me a moment. So let's use a horizontal ray right here. I don't want the rectangle to be a stumbling block to what we want to see. So I can see that yes, I know that yes, this is the golden pocket. Okay, so in my head, I would ask myself, what is my entry model? What model do I trade? If I can find any of the models I trade in that golden pocket, that's where I'll be taking my trade from, especially when it presents a liquidity point. That's where I'm going to be taking my trade from. Okay, so let's see what price actually does here. You can see price from this point where price actually bought. Do you see? it ignored this fair value gap that's here. Let me pause that. This fair value gap right here. Some people will say, this is a fair value gap. Let me go ahead and start selling from here. You can see how price totally ignored that fair value gap. Even though of course, it is an obvious fair value gap, but then it is sitting on a discount level, and price is actually looking for how to retrace and sell. Price is actually looking for a retracement. Price is actually looking for a way to correct its movement and then continue in the original movement, which is a sell trend. So if you are looking for a sell here at a discount level, you're going to get stopped out. You're going to lose money, and of course that's not what you want, right? So price, you can see price is actually coming here. It took out that fair value gap, even though this is an order block right here. Let me take this. This is an order block. If I'm not mistaken, this is an order block right here. This is another block, but it is an order block that is sitting at a discount level, and I don't want to pay attention to it as long as it is in a discount level. Okay, we're looking for a way where price would show our points of interest, will show zones at a premium level. Okay, so let's take this out. So you can see price has tapped into our golden pockets. It has tapped into, remember this from the, let me use the Fibonacci retracement tool again, so you can see that we are still on track. Okay, we are still on track. You can see it right there. So let me take it away. Price has come into our premium zone. Then now I can then look for, okay, what do I trade? I can see a fair value gap, right? I can see another block here. But I feel like this other block would be like, what do I call it? It would be a liquidity point or an inducement point for this POI. This POI right here is a fair value gap. Okay, this is an obvious fair value gap. And I think it even coincides with a breaker block right here. So I guess this is a very good zone. This is a very good zone. This is also an order block up here. So you can see 3 zones right here. This order block right here, this fair value gap, and also this. But this I would be ignoring this because I feel like it is an inducement point, or some people call it an engineered liquidity. Okay, so that is basically it. That is basically it. I would be looking for price to come into any of these zones. So you can spot. What you have to do is basically, once price gets into your golden pockets, you just look for your POI here. If it has any form of liquidity before or after it, I think it is a good to go situation. Okay, so let's see what price actually does there. You can see how price came in nicely, entered into that zone, and continued selling. Okay, so I think it is pretty simple. If you find this on let's look for it on a buy trend. So in this case, since I found we are on a downtrend, so my attention was on the premium zone. So if we are in a buy trend, my attention would be on a discount zone. Okay, my attention would be on a discount zone. So let's take this for example. Let's say we have identified this uptrend. We have identified that price is in an uptrend right here. So let's say that we have this. Let's say we have this, and this, where is the break of structure? This is the break of structure right here. This is the obvious break of structure right here. Where is the low? What is the lowest point that price went to before it influenced this break of structure? It is sitting right here, sitting pretty right here. Okay, so we don't know what price is doing right here. It seems as though price wants to pull back So let's wait for price to actually do its thing. So let's say it is trying to, okay, yeah, the pullback is complete. So now that it is complete, I want price to come into a zone where it is okay to buy. Remember, price is trying to buy, so I want price to come into a place where it is okay to buy. So let me identify my highest point. So this is the range I'm working with. So when I pick up my Fibonacci tool, I'm just going to be placing it from, we're trying to buy, so I'm going to be starting from the lowest point, the swing low, and stop at the swing high. So I'm looking for price to come into these golden pockets from 0.5 down to 1. Okay, so this, let's mark this out. 0.5 is right here. So I'm marking this out so that we can take away the Fibonacci retracement. So you see, it's disturbing to the eye. So remember, this is the zone. This is the entire range from here to here, but 0.5 is here and 1 is here. Okay, so you can see I'm just waiting for price to do its thing. Once it comes into that golden pocket, I want to look for a very good place to buy, and then according to what entry model that I use, so we can continue buying from there. Let me make this a bit faster. Okay, and then you can see price continue. So even though there's a fair value gap right here, I wouldn't want to be taking a buy from there, because I know that if price will eventually come down to a discount zone, which is a good place to buy, and then continue the buy movement. As always, I would say, don't take my word for it. Go over to the charts and let the chart teach you what it wants to show you. Okay, so we've come to the end of this video. It's quite very simple to use your premium and discount zone. If you have any questions, drop it in the comment section. Please give this video a like, smash that like button right now, subscribe to my YouTube channel, and send this video to anybody who you feel needs this sort of information. If you want to learn about other concepts trading the financial market, click on any of my videos, and I'll see you in the next one. Bye bye.